So today I have 5 stocks for you that you can buy and hold for the next 5 years without worrying about losing your money. Now obviously there are no guarantees with investing, but these 5 stocks are not speculative investments, meaning that there is a low chance that you will lose money investing in these stocks. That is, unless you panic and sell shortly after buying them. Now because of these stocks' potential for high returns, they do make up a big percentage of my personal investing portfolio. So in this video I will go through these 5 stocks one by one and give you the investment thesis for each stock. Now each of these 5 stocks do fit into my overall investing strategy, which keep in mind is long-term investing. And really I shouldn't even have to say long-term investing because the definition of investing implies that you hold these stocks for long periods of time anyways. But I feel like this is something I need to specify because there are so many stock traders on YouTube that have convinced you that the only way to make money in the stock market is to trade stocks. And that is not the case. So these 5 stocks are stocks that are riding big waves of innovation and they should keep going up for long periods of time, which means all you have to do is consistently buy into these 5 stocks and wait. Now this is a strategy that is super simple and it is the easiest way to make money in the stock market. Now also these 5 stocks are not the only stocks in my portfolio, but they do make up 60% of my portfolio, so clearly I am relying heavily on these 5 stocks to boost my returns. So how did I pick these stocks? Well, the 5 stocks I will tell you about can all be categorized into different secular trends. And finding stocks that benefit from secular trends is the easiest way to make money in the stock market. This is because secular trends are trends that are expected to grow consistently for a long period of time and are not influenced by short-term factors. So let's cut the chit-chat and get to it. The first stock on my list is a perennial favorite of investors on YouTube, and that is Tesla. And I probably shouldn't have started with Tesla because everyone and their grandma already knows about Tesla stock. But I feel like Tesla has finally matured as a company, and as a result, a lot of the risk has been taken out of the stock. Also, Tesla is a very unique company that could benefit greatly if Elon is able to pull off his master plan for the company. Now, if you have watched some of my other videos, you would know that Tesla is benefiting from 3 big secular trends right now. These 3 are energy storage, automation, and artificial intelligence. Energy storage is of course their battery technology, automation is their robotics they use for manufacturing, and AI is their self-driving software that they are currently developing. And these 3 secular trends or areas of innovation are what will allow Tesla to become a trillion-dollar company one day. Another reason I like Tesla stock as a long-term investment is because of Elon Musk. He has been able to do what no one else has been able to do up to this point, and that is to create an electric car that competes well against the established automakers. Also, Tesla, outside of the legacy automakers, doesn't really have any serious competition. Tesla owns roughly 78% of the electric vehicle market in the US and was the leader worldwide in Q1 of 2020 with 29% of the EV market. And with Big Auto taking their time in transitioning to EVs and focusing on other fuel sources like hydrogen, this will only allow Tesla to grow stronger and capture more market share moving forward. Also, outside of the big automakers, there doesn't seem to be a Tesla killer anywhere in sight. Rivian, a small EV company that recently received over $1 billion from Amazon and Ford, just got hit with a lawsuit from Tesla for stealing proprietary documents. These documents include lists of high-level Tesla employees that know how to build out electric charging infrastructure, and salary tiers and compensation information to help Rivian poach Tesla employees easier. What this tells me is that even promising startups like Rivian are struggling to accomplish what Tesla has done up to this point. And therefore, I think that Tesla has not only the ability to execute their business plan, but also a blue ocean of calm water around them without much competition. Both of these things will enable them to continue growing for the foreseeable future. Okay, the next stock on the list is one of my favorite stocks, and that is Shopify. Now, Shopify operates in the secular trend known as e-commerce. And this is the same secular trend that has allowed Amazon to grow tremendously over the past 20 years. But, and I mentioned this in my last video, the internet is always changing. And when it comes to Shopify, I believe that they are uniquely positioned to compete well against Amazon. This is because as social media and streaming gain popularity, people are beginning to spend more time on the internet, which gives companies the ability to target customers with ads. Now, in Amazon's case, they do not benefit from targeted ads very much because most people already know about Amazon.com. In fact, 50% of people looking to purchase an item online go directly to Amazon.com to search for that item. Now, this sounds really bad for Shopify, but the fact of the matter is that reputable brands don't like using Amazon. And this is a complicated issue, but look no further than Nike's refusal to sell products on Amazon after Amazon failed to eliminate counterfeit Nike products on their site. So Nike opted instead to spend their money on advertising to get more people to go directly to their site in order to buy their products. And really, I think this is the future of e-commerce. For simple commodity items such as paper towels and ketchup, for example, people will go to Amazon. But for higher priced specialty items like Nike shoes, people will go to the brand's website to purchase those items. So I don't want to take up the whole video talking about Shopify stock, but Shopify is empowering brands, whereas Amazon tends to compete against brands. And with the ability for brands to target their ideal customers through social media, more and more consumers will be funneled away from Amazon. Now, make no mistake, Amazon is not going anywhere. It's just that Shopify's business model makes it immune to the Amazon effect, where Amazon just comes in and basically bulldozes the competition. So Shopify, in my opinion, will continue to grow and gain market share in the e-commerce space for a long time. The next stock on my list is one that you've probably never heard of before, but it's one that I've been investing in for about 2 years now. And that stock is The Trade Desk. Now, The Trade Desk does have the smallest market cap of all the stocks on my list, which means that it will carry more risk than, say, Tesla or Shopify, but it also means that it has the potential for very high returns. And we can see The Trade Desk's potential for high returns if we look at its past performance. Over the past 4 years, the stock is up over 1,600%, which is very good. Now, the Trade Desk's business model is a little bit harder to understand when we compare it to a stock like Tesla, because Tesla, for example, manufactures and sells electric cars, which is really easy to understand. But with the Trade Desk, it is a little bit more complicated. So what does the Trade Desk do exactly? Well, the Trade Desk is a global technology company that markets a software platform used by digital ad buyers to purchase data-driven digital advertising campaigns across various ad formats and devices. And I know that was a mouthful, but to help explain the value that the Trade Desk gives to advertisers, let's create a scenario here. Let's say you are a big national brand that wants to put out a new advertising campaign for a new product. Well, in the old days before the internet, all you had in terms of digital ads were TV commercials. So it was pretty simple to set up a digital advertising campaign because there was only one digital platform: television. But now there are many different platforms and many different ad formats for digital advertisers that brands need to be aware of. So by using the Trade Desk, you can more easily manage digital advertising campaigns. That's because the Trade Desk's tools are automated, which means buyers can purchase online advertising from thousands of different websites all at the same time. The other benefit of the Trade Desk is that they have a number of planning and buying tools that make buying ads even easier. One of their products is their KOA artificial intelligence tool. And this AI tool analyzes data from across the internet to help make sure brands are reaching not only the right audience, but also getting the best price for their ads. And since this is an AI application, it can learn over time and gives brands real-time recommendations to help improve their ad campaign performance. So as you can see, this is a very important service for brands to have access to as we switch from TV to multiple digital ad platforms. Also, I really think the future of retail is going to be more brand-oriented, and so giving brands the ability to find and target their ideal customer wherever they may be on the internet will be a crucial service for these businesses moving forward. Okay, the next stock on my list is Square, and this is a stock that has performed very well since the bottom of the market back in March. In fact, Square is up over 250% in the past 5 months alone. But it has also done very well over the past 5 years and is up close to 1,000% over that time frame. Also, despite the tremendous stock performance, Square only has a market cap of $60 billion right now. So it is quite a bit smaller than the other two stocks we have talked about so far. The secular trend that Square is taking advantage of is the shift to digital banking. And this is a secular trend because more and more people are moving money out of traditional banks and into financial apps such as Square's Cash App. The Cash App functions the same as a normal checking account and allows you to get a Visa debit card to make purchases and withdraw money from ATMs. But in my opinion, the Cash App is innovative because it allows you to do what you can't with traditional banks, and that is invest in stocks and buy and sell Bitcoin. Also, the Cash App allows you to send money to friends and family very easily through what's called peer-to-peer payments. But I don't think the Cash App is popular simply because you can make peer-to-peer payments. There are many products now that allow you to do this. Zelle, a peer-to-peer money transfer service, was created by traditional banks JP Morgan, Wells Fargo, and Bank of America, and launched in 2017 in order to help brick-and-mortar banks add peer-to-peer payment services to their checking accounts. Also, Venmo, one of Cash App's biggest competitors, has the ability to easily transfer money to friends and family, but it does not allow for investing in stocks or Bitcoin, which is important because if we look at Square's Q2 earnings report that they just released on Wednesday, we can see that they added $875 million in revenue from Bitcoin trading alone. And if we compare this to their total revenue of $1.92 billion for the quarter, we can see that revenue from Bitcoin trading accounted for 45% of Square's net revenue. However, I do need to add that the revenue from Bitcoin trading is the total sales of Bitcoin to customers, which Square charges a 2% trading fee on. Therefore, the total profit from Bitcoin trading was only $17 million. So it does, in my opinion, make the revenue jump look more impressive than it actually is. But if we look at the gross profit, we can see that this increased revenue did result in a jump in gross profit from last quarter. Now, I didn't discuss Square's merchant ecosystem, but I do think that the Cash App will be the product for Square that will grow faster over the next couple of years, so that is what I wanted to focus on here. Also, there is quite a bit of competition in this space from big banks and companies like PayPal, so Square's ability to grow might be limited due to this competition. But I do think they currently have the best digital banking app right now, and that it will continue to grow for many years to come. Now, the next secular trend I want to talk about is semiconductors, and this one is a hard one for a lot of people because it is a very nerdy subject area. And one of the big things I talk a lot about on this channel is the importance of understanding what you are investing in, which when it comes to these semiconductor stocks is hard to do. Even myself, as a person with a mechanical engineering degree, I struggle to wrap my head around all of these different products that these semiconductor stocks come out with. Also, there are just so many different things to keep in mind, and it is hard to definitely say that one company is doing it the best. So I will give you my top recommendation, but I don't think it is a bad idea to hold a couple of these semi-stocks in your portfolio since they are just harder to understand. For me, the only two semiconductor stocks I hold are Nvidia and AMD. But the one that I will recommend that I think has the highest growth potential is AMD. AMD is stealing market share away from Intel right now and looks to continue to steal market share from Intel for the foreseeable future. Also, Intel stock is double the size of AMD, which means that AMD has a lot more room to run. In late July, Intel released a statement saying that the release of their 7nm chip will be delayed until 2022 because of manufacturing issues. AMD, on the other hand, already sells their 7nm chips and has spent 2020 releasing more and more versions of them. Because of this, analysts are predicting that AMD's share of the server market will grow from 10% to 30% over the next 2 to 3 years and 50% in the next 4 to 5 years. Now, Nvidia is also a great stock to own in this space, but AMD has a lot of momentum right now and will probably grow faster than Nvidia will over the next couple of years. But I do like Nvidia a lot because they do have more diverse product offerings than AMD, and they serve a wider selection of industries in the market. So my advice is to forget about Intel and buy AMD and Nvidia instead. Now guys, if you enjoyed this video, you can watch some of my other videos that are on the screen right now. Also, if you enjoyed this video, make sure to subscribe. It is completely free, and all you have to do is click the circle on the screen with my face in it. Or you can click that big red subscribe button. And with that, thanks so much for watching, and have a great day.